over the years, we've had a number of secretaries of treasuries that were not really into financial markets. And so you're the right person at the right time. But it's interesting when I think about it, how do you strike the balance between the administration's goal of reindustrialization in the U.S. and the risk of isolating the U.S. economy?
Well, I think that they're not mutually exclusive, and as I've said many times, that obviously in this trade puzzle, China's the biggest piece. Where do we end up with China? And I said during IMF week in Washington, said it's possible that we could, as Ray Dalio might say, do a big, beautiful rebalancing. That if we want more manufacturing, everyone agrees except Chinese leadership that they need more consumption. We could actually do that together. And then, look, on the other side, that getting better terms of trade is not always a straight line. It's not always a pleasant process, but I think at the end, the trading relationships will be stronger. Our security and values ties will still be there. I look back and I think about the example of NATO and German fiscal spending. So I lived in London for a long time, ran the Soros office there, and since forever actually, that whether it was the French president, the Italian prime minister, people in Brussels were trying to break open the German piggy bank. And President Trump, not in a straight line, not in what anyone would call a diplomatic manner, has gotten NATO countries to step up and meet their spending requirements. I think these numbers are approximate, but I think only 25%, when he came in 2017, only 25% of NATO countries were meeting their spending requirements. Now I think only 25% aren't. So the Germans, for the first time, are going to allegedly do a big fiscal spend, which will drive European growth. And so can we do the same thing on trade? I think so.